Okay, guys, I am terribly sorry about that. Obviously, we had some connection problems. I don't know why, but we were sent offline by the stream on YouTube while my streaming software was still working perfectly. My connection was great. I don't know, of course, these things happen. Technology is not immune to these fails. From time to time, of course, we love our technology. We are living in a magical time when it comes to technology, especially in communications, like what we are doing right now. I'm in a country, I have viewers in many countries, I have a broker in another country, and we are all communicating together in a magical way. But of course, this magic sometimes fails us. It's not immune to fails. So what happened was strange to me. I've never seen something like that. My streaming software was working perfectly, but my YouTube stream was down. So with that, guys, we are back again. We are streaming again. And let's continue. We talked about the euro through the first part of the stream. The euro analysis, we had our recommendations, we placed our orders, we are ready to take advantage of the euro today. Now we are going to take the time that is left in our first hour to talk about some strategy, because you know me, guys, now I really like to talk about trading to show you some of the strategies that you can use from not only for today, of course. What I mean is that I want to, just like I said yesterday or on Monday, I've been seeing this this week. I want to show you how to fish. I don't want to give you a fish. I like this coat, and I'm using it right now. So, guys, what I'm going to do right now is this. I'm going to talk about a strategy that I use a lot, and I really believe in its strength. It's a very strong strategy. It is something that you can use yourself on a daily basis. You can use it every time you open the charts. You can look for the levels that, in my own opinion, are important, and we have something. We have something that we can use all the time. So guys, yeah, let's talk about that. I'm sorry I had to do these things to make sure that the chat is working again after these difficulties that we were having with the stream. Now we're back strong, and we can, of course, start talking about trading techniques. So today we are going to continue doing what we have started on Monday, talking about trading techniques in these analysis sessions. So we'll be doing a little bit of analysis, then we'll be talking about the technique that you yourself use it on the chart and use it to specify the very important support and resistance levels where you can initiate your positions. Today, on Monday, we talked about the moving average, one of the best trading strategies you can follow. It makes me profit on a continuous basis all the time. When I use that moving average strategy, it helps me a lot get in the market at the right time. And today I'm going to talk about another one of my top favorite tools, Fibonacci and other retracement levels. Retracement levels in nature are support and resistance levels. We are using a number of percentage ratios relative to the previous move. The first person to talk about this was the godfather of technical analysis, Charles Henry Dow. He, in the 1890s, he talked about the market. He was writing for the Wall Street Journal, and his articles, I think there were something around 250 articles that were collected later by his followers, his students, in order to create what we know today as Dow theory, the Dow theory. He himself, of course, never said, I have a theory and call it that theory. But his followers, his students, especially Hamilton, used these articles to build what looks like a theory about the market. So they arranged everything, and because of these guys, we know what Charles Dow was thinking and what he came up with. And we are still using this until today. So the first person to talk about retracement levels was this genius, the man we owe a lot to. We technical analysts all around the world owe a lot to Charles Henry Dow. He said that corrective moves, or the moves that look like a break in the direction of the market, we are moving to the upside, and then we have a break of moving sideways or to the downside, and then we resume the direction of the market again. He said that these moves, guys, are likely to stop at three levels: the 1/3, the 1/2, and the 2/3. The 1/2 I did not include it here because it's common to everybody, but the two levels that Charles Henry Dow talked about are the ones that are on the screen here: the 1/3 and the 2/3, which of course translates into 33 and 67%. Now, the legend, my own favorite trader in history, Jesse Livermore, he talked about the 50%. He noticed that these moves stop at the 50%, around, of course, he said half. Back then, these guys did not use the percentage a lot. They said third, half, 2/3. This was the lingo back then, I think, between traders. And this unbelievable legend, notice that the move to the downside when we are in a rising market usually stops around the half of the previous move, so the 50% level. And then a couple of decades after that, in the 30s, Ralph Nelson Elliott made the connection between his wave theory and Fibonacci numbers. And he said that corrective waves usually stop around Fibonacci retracement levels. And the two main Fibonacci retracements are, of course, 61.8 and 38.2. We do have other retracement levels, of course, other Fibonacci levels, but these are the main ones. I'm going to give you an example before we take a break, and we're going to continue after the break. For example, as you can see here, we do have a rising market, and as you can see, guys, the market was rising. We had a drop in 3. Of course, the 3 means a lot, especially if you are an Elliottician or you use wave counts. So 3 segment wave to the downside, stopping extremely close at the 61.8 level, and then boom, 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 boom. This is the power of retracement levels, guys. They can get you in here or very close to this level. Of course, some people take the risk of getting in immediately when the price is touched, but of course, this is a bit risky. Now, others prefer to see the market move in the right direction before we jump in with our positions. And this is what I prefer, and this is what I'm gonna teach you about today. I'm gonna teach you how to do that, how to pick which of the retracement levels is the one that is going to make it, because of course we have many retracement levels. And just because we touched one of them, we get in on the long side of the market, it does not make a lot of sense. Let me just explain to you why I'm saying that. Before reaching 61.8, of course, the price reached the 38.2, maybe here, the 50%, maybe here, and it continued moving to the downside. So maybe by then, by reaching 61.8, your stop would be already hit. So what we need to do is to look for evidence that this is the support, this is the resistance, this is the retracement that we are going to change direction from. Another example here, an example to the downside. We have an obvious downtrend. We corrected up to the 38.2 and we started falling again and again, the 38.2 and started falling again. This can happen when the correction stops not once but more than once at retracement levels before we continue moving in the direction of the main trend of the market. Again, guys, this is an example of how things can go. We are dropping, then we retrace. As you can see, we did not stop here, we did not stop here, we stopped here. I'm going to show you how and why we are selling here, not here, and not here. And of course, after that, the price is falling and we have ourselves a fantastic profit. Look at this. This is crude oil daily chart, guys, just to show you what kind of strength we are talking about here. The sell here is, or the, let's say the Fibonacci level is above 60, and in a matter of days, not a few days, but it's still days, we were down almost 1,000 pips. So this is the strength, guys, of the retracement levels. I just wanted to tease you a little bit because after the break we're going to talk more and more about that, and I'm going to show you. This is the trick, guys. Of course, the retracement levels are very important. They can be very helpful, but there is a number of them. Which one should we use? This is what I'm going to teach you after the break. And before we go, I just want to, guys, to remind you that this live stream is sponsored by QTimeFX, and QTimeFX, guys, is offering you fantastic trading conditions. First of all, you can enjoy a leverage up to 500 to 1 if you like that kind of leverage. Of course, lower leverage is also available. And QTimeFX was awarded for the lowest forex spread broker of 2018 by ACIFMA. Imagine yourself trading with 0.4 pips, guys, on the euro, dollar, and the dollar yen with zero commission. Of course, guys, you know, a lot of brokers offer that kind of beautiful spreads, but they charge you commission about that. So you are back to where you started. It's not a huge advantage, even if you are trading with such fantastic spread, if you pay commission. But if you trade with such spreads without being subject to commission, then you are enjoying fantastic trading spreads and trading conditions. And this is what we are doing here at QTimeFX. Segregated client funds in UOB, which is ranked in the 22nd place in World Bank ranking. That is some really secure conditions that your money, your funds will be in. Open a VIP account with QTimeFX with a minimum of $150 deposit and get $500 in free bonus. Make a deposit of $300 and get $500, or make a deposit of $150 and get $250 in bonus. You can withdraw, of course, after $1.50 per lot trade. To get the promotional benefits, these amazing benefits that even to me, you know, I've been in the market for 19 years. I cannot say that I have seen conditions that are better than this. They are fantastic trading conditions. So come join the fun, guys. But to get these promotional benefits, you must contact us at FX_educast via Telegram. Okay, guys, you must do that. You have to go through this Telegram account in order to get these benefits. You just don't go around looking for another way. You must come through us because we are offering you these benefits. Okay, so don't hesitate to contact us at FX_educast via Telegram, and we will be more than happy to help you. Our FX Educast team will be waiting for you with a smile on their faces to help you. If you have questions, we're going to answer them. If you need help opening the account, we are going to do that. If you want to get more information about these promotional benefits, also we are there to help you, and always with a smile on our faces. So Don't waste your time trading with conditions that are not very, very good for you. Contact us at fx_educast via Telegram, and we will be there to help. That's it for the first hour, guys. And we will be back in a matter of minutes, 5-6 minutes, something like that, and I will be back. So see you then. Okay, guys, we're back after this short break. I hope everybody is doing great. I hope that you are ready for our next part. Hello, it's me, Munther Marji, your host with FX Educast and QTime FX. And we are now going to continue what we have been doing for an hour or so. We are going, of course, to talk about a trading strategy. And after that, we're going to continue talking about the market. So you guys, we started talking about retracement levels before the break. What I want you to keep in mind is this. Although it sometimes looks like magic, it is support and resistance. It is not magic. We should treat them like we treat any other support or resistance and estimate the chances of them holding or breaking in the same way we do. Now, for that, there is something that is very important. It's a concept that I really like. It is the concept of technical confirmation. When more than one technical tool is pointing in the same direction, they confirm each other. When you believe that the market is going up, don't build that confidence on one tool. You have many tools you can use. So when you have more than one tool pointing in the same direction, that is, of course, better than having only one tool pointing in one direction. So we can use previous tops and bottoms to confirm if these levels are important. What I mean by that is once we find that this level, for example, 1086 on the euro today is a retracement level. So I go back to see if we have previous tops and bottoms very close to 1086. I draw some trend lines. I look for overbought and oversold readings. And of course, candles are very, very important because after testing these retracement levels, the shape of the candles and the patterns that candles leave on the chart can help you very much estimate the chances of this level surviving or moving or reversing, surviving and reversing the price, or if the price is going to continue moving in the same direction with no reverse at this specific retracement level. Of course, after the price starts moving away from the retracement level, we can also use trend lines. We draw them all the time and we see if the price is moving in the direction expected with strength, or if it's breaking trend lines and going back to giving some signs of weakness. That, of course, is very important. And one very important thing is also Elliott wave counts. When we count the waves, when we have a 3, for example, ABC, we have been witnessing a lot of ABC patterns lately, pointing to the downside on the euro and gold, and these can help you very much. When you see that an ABC is terminating very close to a retracement level, that of course leaves this level with more importance than just having a retracement level without a 3 that supports it. Now let's look at some examples. I'm going to go as fast as possible through some examples here on the chart, and I'm going to save some examples from live on the chart for the third hour. So here is an example. This is the pound hourly chart, and as you can see, I am using a candle chart and I'm using RSI as well. So here, after of course dropping, the price started recovering, trying to recover the previous move, moving to the upside. We stopped at each of the 3 key levels that we use: the 38.2, the 50%, and the 61.8. As you can see, this is extremely close. Here it's very close, here it's very close, and here it is very, very close. So which one should we follow? Of course, in this case, if you got in at the 38.2, you would have made some profit. But if you did not close this profit in this area, then you would be in loss here and in loss here. Again, that happened at the 50% level. If you got in this is your profit area, but once the price starts moving to the upside, this is a loss, and maybe yes, maybe no, your stop would be hit. It depends on where you place it, of course. And then when you sold at 61.8, the market moved in the direction you are expecting. So here, what I want you to focus on is how we can use indicators to pick which retracement level is the one that the market is going to reverse from. First of all, we got to 38.2, but look at this. The RSI was still very weak. It does not indicate that we have seen enough corrective action to the upside before reversing. So it's a good, of course, it's a good level to sell at, especially with this beautiful candle here. We have shooting star, although for a shooting star, I prefer if this move was larger, of course, but the shape is 100% shooting star. Now, a shooting star, but the RSI is not very high. So we had some profit, this kind of profit. Now, when we got to the 50%, the 50 is, of course, more important than 38.2. It's one of the levels talked about by every legend out there. Livermore, Dow, Elliott, as we saw before the break. Every one of these guys talked about the 50%. And it is, of course, more important than 38.2. I really believe so. Out of my own experience. Now we got here, this is a spinning top, but the RSI is still not in the oversold, so we dropped more than we did the first time, but again we moved to the upside. Now look at what is happening here. This is not a very strong candle, but here just look at what has happened here. First of all, we almost touched the 61.8 retracement level, and the RSI was in the overbought, so this is good. Now, in the overbought, that means look for a top. It does not necessarily mean that we are going to see a top immediately. It means look for signs of a top. Go to the chart, look for retracements, look for candles, look for anything that can help you estimate if the price is going to top around current levels or not. So when we got to the 61.8 here, we almost touched it and we started falling. Some of you guys may sell here. I know that. To a lot of traders, once they see a retracement level touch, they get in. But that is not the right way to do it. Of course, sometimes you will be very happy about that, but sometimes you will not, because you are taking chances without confirmation, without technical confirmation. Oh, retracement level is touched. Let's get in. Well, did you check RSI? No. Did you check candles? No. Do you have previous tops and bottoms in this area? No. What about other indicators, stochastics, MACD, moving average, trend lines? Did you check anything? No. Just touched the retracement level, so I got in. That is not the right way to trade retracement levels. I know a lot of people do that, and even me, sometimes I feel when the retracement is touched, I just want to be in. I just want to get in, okay? But without confirmation from other technical tools, you are in higher risk of failure. But when you have the confirmation, the risk of failure goes down very, very well to your favor. So maybe a sell here, maybe, yeah, of course. But that's not what I want you to do. What I want you to do is to wait for the RSI to change direction. And sorry about that. I'm gonna zoom in a little bit so I can show you what I mean, guys. So here we almost touched it. Sell, yeah, maybe, but no, that's not how I want you to do it. A lot of people do that. This time you got away with it, but sometimes like here, you are stopped out, okay? So you wait. The right thing to do is to wait for confirmation from the price itself, and to have a support of an indicator that would be better. So the main tool to make decisions on which retracement level we should use to get in the market is definitely the price. When the price starts falling, that is a good start. But of course, I wait for the close. I want to see something. I want to see a candle pattern here that indicates weakness. And this happening very close to 61.8 level would be a fantastic entry point. So I wait and I see, look at what has happened here. We have an engulfing pattern. Of course, if you know your candles, this is an engulfing pattern. In currencies and forex, we don't need a gap. In other markets, of course, the right or ideal engulfing should have a gap between this candle and the next, but it's forex market. We don't have gaps here as much as stocks and other markets have. So what we need to see here is a candle pattern, and we did. This is an engulfing pattern happening very close to 61.8 retracement level, with the RSI being overbought and changing direction. It is really hard to find a setup better than this. This is one of the best setups you can be in when retracement levels, RSI, candles are all pointing in the same direction. Usually it is a fantastic opportunity to get in the market. So we get in. When do we get in? Anybody knows? Anybody knows when, guys? Of course, when this candle closes and the engulfing pattern is confirmed. So I don't sell here, I sell here at the close of this candle. And as you can see, immediately after that, the price dropped a little bit, up, down, but did not travel beyond my entry point. And then boom, and then boom, and then boom, and my profit is getting ridiculous. Of course, we are talking about more than 150 pips in a matter of hours. This is an hourly chart, guys, so every candle is only 1 hour. So you get in here, not here, if you want to keep the risk to a minimum. If you can handle more risk, of course you can get on the touch, but that's not what I want you to do. Now, another example is how to use Elliott and RSI with the retracement levels. You know, in Elliott, or in the wave principle as he called it, he did not name that Elliott wave theory. We say Elliott wave theory, but Elliott himself called it the wave principle. So in the wave principle, the market moves in fives in the direction of the main trend, and then in threes against the direction of the main trend. And then we continue doing so until the trend is reversed. So if we have 5 to the upside and 3 to the downside, that will continue to happen until the trend is done, it's over. Now the trend is to the downside, we will start seeing 5 to the downside and 3 to the upside. If you can count your waves, you can easily count this as 1, 2, 3, 4, 5. Everything is perfect here. We don't have overlapping between 1 and 4, and we have 3 as the strongest wave. So it's a fantastic wave count, especially that wave 1 and wave 5 are very similar in size. So everything says that this is a 5 to the upside. When you have a 5 to the upside, that means that the main direction of the market is to the upside. Now we wait for a 3, and after a 3 we get in, because then we are going to expect, maybe not see, but most of the time we do see another 5 wave sequence to the upside. So we wait for 3, and as you can see, we have drop here, 1, 2, and 3, and third is the strongest. Of course, when we are talking about moves against the main direction of the trend, we label them with letters, not numbers. So we say A, B, C, and C is the third wave, which is usually strong, and that of course can be compared to the third wave in the 5. It is usually the strongest one, not all the time, but usually the strongest. And again, usually the third wave in the corrective sequence is usually the strongest one. It's not a rule, it's what happens most of the time. It's okay if it's not the strongest, but when you see that, that's a confirmation that you are counting in the right way. So after counting 1, 2, 3, 4, 5 to the upside, A, B, C to the downside, that's it, guys. To me, I just want to be in. But where do I get in? That's why I use RSI and retracement levels. In this case, I use these 2 tools in order to know where to get in. So here, after dropping, maybe at the 38.2 retracement level. When I look at the candle, this is a long red candle to the downside. It did not stop very close to the 38.2, so I skipped the 38.2. Now, some people would buy here and maybe place a stop just below that, and then their stop will be hit because the market continued moving below the 38.2. Why did that happen to them? Because they did not wait for a confirmation that this is the retracement level they should use to initiate their own positions. Now, what happened at the 50%? We got extremely close to the 50%, maybe 2-3 pips above that. And after, of course, the count is very clear. We are waiting for a sign here of reversal. When we get this close to one of the Fibonacci or retracement levels in generals, and then we start moving to the upside, that is good enough. Just look at this beautiful candle, guys. Look at this. This is, of course, a hammer, one of the strongest bullish candles there is in all of candle analysis. The hammer is one of the best bullish candles that you can count on. The hammer happens, of course, after a drop, when it needs to appear after a drop. If it appears after a little bit of movement to the downside, that's not good enough. I want to see a significant drop before the appearance of a hammer. It appears in the shape of a hammer. That's why it's called a hammer. A long lower shadow, very small body near the top of the range, and very small or no upper shadow. The color is not important in the hammer. Everything that I need to see, and of course it comes after a drop, everything that I need to see in a hammer is here. And moreover, it happened. The law of the hammer is only maybe 2 pips, 3 pips above the 50% retracement level. And to add to that confidence, we have the RSI in the oversold, inside the oversold area, and then changing direction and moving away out of this oversold area. So that is a fantastic situation to be in. You have a wave count, an ABC terminating near the 50% retracement level with a hammer and RSI change. Unbelievable setup. So you get in immediately when this candle is closed. Okay, this is how you do it. You do not get in here, guys. This is not the way to do it. Because why? Because we still have 61.8 retracement here. We have 78.6 and 88.6 lower and lower. So if you get in here without any sign of the market reversing, you might be suffering from a loss when we drop and still find support at later retracement levels, but not the one you picked. I want you to pick the right one, or let me rephrase, I want to increase the chances of us, you and me, picking the right one, and that happens only with using other technical tools around the same level that we are thinking of. We are thinking of 50%. We look, do we have a sign from the market itself that the 50% level is the one we need to care about for this specific time? And here, of course, we does. We don't buy here, we buy when this green candle, when this hammer closes. So on the close of the hammer that almost touched the 50% level, we get in, we buy here, and as you can see, guys, immediately the market, maybe it dropped, what, 5 pips below our entry, and then immediately it started moving to the upside. Now, the target, of course, should be above the previous top. So if I get in here, I don't close my position here or here or here. I want the market to move beyond the previous top, because when the market stops at a retracement level, that means the drop towards this retracement level is corrective. So this whole move is corrective. And when it is corrective, that means the market after correction, of course, will reach a higher high. And this is exactly what happened here. So I placed my limit above the previous top. And now, what about the stop? This is a very important question. Should I place it immediately below this level or below the next one? Of course, you can do whatever you want, because there are no hard rules on this one. It depends on your risk appetite. But if you want my own opinion, when you get in at a level, you need to place the stop below at least the next level, or maybe even the next one if your risk management allows for that. So for example, if I get in at the 50%, and if I place my stop below the 61.8% and it's 60 pips, well, that's okay. But if I want to place it below the 61.8 and it's only 40, then I would look to 78.6. What if I place it below that level? How much pips would my stop be? If it's still reasonable, then you can use that level. And always, guys, of course, always, you can go back to the same tools that we are using to pick which level we need to get in at. We can use the same exact tools to pick which level we can place our stop below. For example, previous tops and bottoms. Here we have a top that is very close to the 61.8. Look at this top, what, 2 pips or something like that? So here, this further confirms the importance of the 61.8 level. So I place my stop below the 61.8 level. So I buy here. I don't place my stop here immediately after the same level that I got in on. No. I place my stop below the next level. Okay? So if you buy at the 50%, you place below the 61.8. If you buy at the 38.2, you place it below the 50%. If your risk management allows for, if there is still a room to increase the stop, you can also place it below the 61.8 retracement level. Always think about risk, guys. Technical analysis is only one part of the equation. Risk management is our very important factor in setting the level for stop. Where should we place our stop? Even if technical analysis is pointing to one level, but from a risk management perspective, that is too much. We cannot use that level. We have two options here. Either we lower the trading size or we lower the stop itself in terms of pips. Okay, guys. So with these examples, I want to finish this session here. I'm going to show you, I have prepared more examples than that, but I don't want to waste a lot of time on this. Because the next hour, what I'm going to do is that I'm going to show you examples on the chart, and we do have fantastic examples on the euro and on gold recently. I'm going to talk about them next hour, so don't miss that because this is live. I told you about this strategy. Now I'm going to show you how it works live on the chart. Okay, guys? So with this, let us now go back to the charts. And before we go back to the charts, I want to take a look at my beloved people. I love you guys. I want to see what kind of comments, requests, questions you are leaving me. I got on the chat with you guys and I wrote this. I want to know who followed that magical gold recommendation on Monday. Raise your hands because it was unbelievable. It was one of the best trades I have done recently. I'm very happy about it. Nick did, very happy. And Blaine, hey, yeah, buddy. Pound it. Everybody who got in, congrats, kudos. I'm very happy about that. Heather got 89 pips. Thanks, Munther. Welcome. That makes me very happy. When people come back to me telling me that they made money on my recommendation, that makes me a very, very happy man. Who else? Michael, 124 pips out of the 174. Fantastic, buddy. Crazy. It was crazy. The time it took for that recommendation to get us where we want was unbelievable. It only took a few hours. It was very nice. 174 pips in a matter of hours. That is something that for a lot of traders, when you do that kind of a profit for a whole week, 174 pips, then you're doing great. So how about making 174 pips in one trade in a matter of hours? It was less than 12 hours. The guys at FX Educast are being very kind to me. Thank you for these words, guys. It was magical. Thank you, everybody. Very happy about that. Blaine is uh, complaining about how hard Elliott waves are. Well, actually, it's not hard to learn. It's hard to implement. When you learn it, of course, the wave sequence, we have a number of wave sequence types that you need to learn, that you need to memorize, of course. And when you see on the chart, you know that this is impulsive, this is corrective, and this is the main and most important thing when you use Elliott wave. You need to know if you are in an impulsive phase or corrective phase, because once correction is over, we want to be getting on the impulsive side of the market. I agree with you. It is a bit hard, but the hardness is not in learning it. So go ahead and learn it, buddy. Grab a book about that, read it, familiarize yourself with all these types of wave patterns, wave sequence types, and then go to the chart and try to understand it. I'm willing, of course, to give you a whole course if we can find time for that, a whole course about Elliott. It's going to take maybe a whole week of 2 or 3 hours a day in order to explain everything that you need to know. But at the end of that week, you will be getting yourself some serious Elliott wave knowledge, and you will be able to implement it on the chart. Now, the problem is that it is subjective. So when somebody says, yeah, this is a 5, another trader may see it as, no, it's not yet a 5. The subjective problem is the real problem with the Elliott wave. There's a saying that I've heard many years ago. It says that get 10 Elliotticians in a room with one chart and they will get back to you with 11 wave counts, 11 analysis opinions based on Elliott wave. So you can come up with anything using the Elliott wave, but of course with time you will get better and better. You will get smarter and better in identifying the patterns on the chart, the waves. Just like we did recently, we have identified many ABCs which turned out to be fantastic trading opportunities. So I'm willing to explain that to you guys if we have the time, of course. With these trading sessions, I don't know if we can do that, but I'm always ready to do so. And one of these things that we were talking about, the waves, the wave counts, using Elliott wave and analysis is the analysis that left us with that magical recommendation on Monday. You remember, guys, this was gold. I did not touch this chart from Monday. I kept it as it was. We talked about ABC, of course, and the ABC was touching 61.8 retracement level. Let me just keep the 61.8 retracement so I show you how close it was to this level, as you can see. And we calculated, of course, the level at which wave A will become equal to wave C, and it was here. So we placed this horizontal trend line here and the Fibonacci level here, and as you can see, they are extremely close to each other, guys. Just look at this. Look at this. Unbelievable. It was, I think it was, what, 8 pips or something like that, 6 pips maybe, between the equality and the Fibonacci level. And look at this bottom, exactly inside the area that we have predicted that it will. It was a very small area, and we predicted that it can change the direction of the market, and it did immediately. As you can see, the market moved to the upside, reaching our limit. So why? These are the notes that were left on this chart on Monday. As you can see, equality target was 1457.2, Fibonacci was at 56.6, so we expected the market to bottom inside this 6 pip area, and it did. That's why we had our long at 57.2 with the target. We placed the limit. This time I told you that because of the ABC and bottoming at Fibonacci level, we're going to use the second target, and we did, and of course we got there. So the reason I want you to know why we did this, why this worked so well, it's because we combined 3 things. it was, of course, first of all, the ABC wave count. So we used Elliott wave, and then we used the retracement levels. 61.8, this was our retracement. When we saw that the target for C to be equal to A was very close, 61.8 retracement level, we knew that something is going to happen around here. And of course, we also knew that this level itself, we don't need this anymore. Let me delete it. This level itself, the equality level, was a support in the past. Look at this beautiful, beautiful reaction to this level. And again, it was a resistance here. So we combined Elliott retracement levels and previous tops and bottoms in one analysis that pointed to the upside, and the speed was unbelievable. We got to our target very, very fast. So with this, of course, guys, what does this mean to gold right now? Of course, it does mean that as long as we see threes, ABCs pointing to the downside, it means that we are moving to the upside. So we can expect more and more strength. And what I'm interested in, I did not take a look at this before now, so I want to see if this bottom is also a Fibonacci or a retracement level. It happened at a retracement level, not very close actually. It's not very accurate. No, it's not really accurate, but it is reasonable. It is still close to the 61.8 retracement level, not very accurate though. From there, before I see where we got from there, I just want you to note this. Threes, guys. This is what you need to look for in the market. When you have ABCs, the market will move in the other direction. It happened here, as you can see. It happened here, as you can see. So again, an ABC, but unfortunately it did not touch 61.8. That's why it's okay if you missed this. I won't blame you much, but on the way higher, maybe after crossing the moving average band here, maybe that would be the time to get in the market. Now, what does this mean? ABC to the downside, ABC to the downside. It means the market is still bullish. We need to keep believing in the bullish possibilities of this market. And we are expecting the move to the upside to continue. I'm not going to change my mind today. I'm still bullish on gold. I was bullish on Monday. I was bullish last week. I was bullish for some time now. And the main reason, I just want to show you the main reason. I don't want to ruin this chart, so I'm going to use another one, maybe this one. I'm going to show you the main reason why I believe gold is going higher. And for that, I think we need to use the daily chart. This is just a reminder, guys. We said this on Monday, but I want to remind you why this is very important. Take a look at this unbelievable accuracy. We have been, of course, rising since April. We topped in September. Then we started moving to the downside in threes. And of course, when you have threes pointing to the downside, what do we have, guys? Anybody can tell me? An uptrend, of course. When we have threes, when I say threes, of course, I mean ABC. When we have threes to the downside, that of course is an indication of an uptrend in the market. So we still are seeing ABCs to the downside, and this here, this unbelievable accuracy at the Fibonacci 38.2 retracement level for the medium term, 2.8 pips below it, guys. And then we started rising. Of course, we have a doji here. It's very similar to a doji. For an ideal doji, of course, we don't want to see any body here, only shadows. But a small body is okay. This is very small, so it's okay. This is real market, guys. It's not a book about candles. So this happens in the real market. From here, of course, we started moving to the upside. Now, let me just focus on, as you can see, we are pushing currently we are pushing towards the highest price in 13 days. So we are touching, the high currently is 77.6, the highest price in 13 days. Let me just focus on the chart for a minute and try to find the right resistance and support. So you guys, one of the things that I really want you to note here is this. Remember, we have been talking about retracement levels today, and for the past, I want to show you this, guys, on the chart. For the past few days, we have been finding resistance around 38.2 retracement level at 1472.5. As you can see here, and again here, we tried to overcome it here on Monday, but we did not. We went down again. Now, this is a 4-hour chart. So for the past 20 hours, we have been trading above 72.5. As you can see, this candle closed above it. This candle is almost completely above it. Same here, completely above it. So now we are obviously trying very hard to break 72.5, and we are doing almost 50 pips above that, which is fantastic. We should continue moving to the upside. However, we need to care about the next level. Now, what about the 50% level? The 50% is at 80.8. We are around 30 pips or 40 pips below that at the moment. 30 to 40 pips, something like that. And to wait for that level, we should wait for it. We should look for signs of strength or weakness against that level. If the price cannot overcome 80.8, then problems may start to appear. But if we break above this level, then we should continue moving to the upside. On the way to the upside, we also have 89.1, and we do also have a more important level at 95.9. So guys, to me, the resistance starts, it's of course, as you can see here, we do have a bottom very close to this Fibonacci level or retracement level in general. The low here is 79.2. I think this was on the Fed meeting, maybe earlier this month, I think so. So 79.2 and the Fibonacci is at 80.8. They are 16 pips apart. Of course, this is a volatile instrument, so 16 pips are not much. They are very close to each other, and that is why I really need to focus on 1480.8. So the first thing that I'm gonna leave you with here is that resistance is at 80.8. Now, what about the support? The support, we can use this, of course, we can use the 38.2 retracement level, but to me, that kind of usage after breaking a retracement level to consider it as support does not make a lot of sense. So I'm going to look for another way to find or to spot support. One of the best ways is, of course, to use trend lines for the whole recovery attempt. Now, unfortunately, this is very far from where we want to be. So if we say that we have a support at 1461, of course we do, but it's not really relevant to where we are trading right now. That's why we need to find a closer support level. Also, 64 is not very close. Now, the last part of this recovery started here, as you can see. And if we draw a trend line, it's very small, of course, it's going to be very small, but it is a perfect trend line with 4 touches. The only thing about this trend line is that it's very small, but the slope is very good and the number of touches is fantastic, and the reaction from the price to these touches is very good. So in all cases, we can consider this trend line to be the support that we need to care about. And currently, this trend line is running around 72.70. That is, of course, better than using 61 because this level is much closer to the current price action. That's why I'm going to use these 2 levels, guys, as my support and resistance for today, and I'm going to start building my strategy. Now, I really wish I can tell you guys to buy immediately, but I need to see a resistance broken to the upside before I say that, and that's why I'm going to issue this trading signal by, if we start, sorry about that, guys. By just above the 80.8, so we have the resistance at 80.8. How about 10 pips above that, 81.8? Now the stop should be above, below the support, which is 72.7. So 71.7 does that. That is the absolute maximum that we can allow for 99 pips, or actually it is 101 pips. So we need to cut just a little bit. So I'm going to use only 5 pips above 80.8 to initiate my long position. So buy at 81.3, stop at 71.7. Now the 2 targets, I'm going to give you a small target initially and a better target as your second target, and leave the choice to you guys. Initial target, so if we got in here, we need to look for something here. We can wait for this, of course, but it's going to be around 80. No, I want to give you something that is closer. 81.3. We can use, of course, we do have a number of intraday tops and bottoms here that we can count on. To me, I like this high here, 86.4. So 86.4, it makes a good target, 51 pips. But for the second target, I want something more exciting. You know, I want it like Monday. We had our limit at 174 pips. So I'll be looking for something in that area. And of course, the 71.4 retracement here makes perfect sense. 95.9. 95.9, that's 146 pips. That is very good. Another entry is the one that is provided by this trend line. If we get back to levels just above this trend line, I want to be long as well. So I'm going to initiate another long position at 72.7. Buy at 72.7. Of course, when we, guys, I just want to remind you, when we have 2 recommendations in the same direction, what you need to understand is that we want to be in on one of them. The one that is hit first, the one that got triggered first, we're in. and we go immediately and cancel the other one. We don't want to be in two positions in the same direction at the same time, because that's double the risk that we should carry. And I don't want you to be in much risky situations. That's why, guys, please, you need to follow the market when we have two recommendations in the same direction. Once we get one of them in the market, we cancel the other order immediately. Very simple. But of course, you need to follow the market. You need to keep your eye on the market. You can't place these orders and then go out to drink some espresso and some cafe and talk with one of your friends about shopping. You need to follow the market. Some people believe that you can place your order and go out. Of course you can. But when you are there, you can adjust yourself and your strategy to what is happening in the market. That's why I keep my eye on the market 24/5, not on 7, because on Sunday and Saturday, I don't talk about the market at all. But for 5 days between Monday and Friday, even in the middle of the night, the market is all that I have on my mind. So place these orders and then cancel one of them. Okay, guys, this is the agreement we have always. Whenever you see two recommendations in the same direction, we want to be on in the market on one of them. So we wait for any of them to get to us in the market. Once that's done, we cancel the other order. Our stop would be a little bit tricky. Let me see. Let's first look for targets. Target 1 and target 2. Target 2, I'm gonna use this same 95.9. I love this target. I really believe we can get there in the very near term, maybe before the weekend or maybe early next week. I'm really keeping my fingers crossed for 1495.9. I really like this level. Initial target, it should be much closer than that. Current high, the current high is 77.6. 77.6, well, let's make it 77.7 to make them around 50 pips of profit. Okay, now what about the stop? This is the only thing that I need. Now if I buy here, I can see that we do have the moving average band in this area, and we also have yesterday low at 64.7. I'm going to use yesterday low as support, 64.7. So it's 64.7, right, guys? Sorry, 66.7. So 66.7 is my support. Of course, I want to place the stop not at the support itself, but a little bit below that. To me, 20 pips is enough because of the overwhelming bullish situation. So 64.7, that makes perfect sense to me. Again, for one more day, I am not gonna issue a short recommendation on gold, and that shows you guys, of course, how much I'm in love with what the bullish outlook is showing us on the chart of gold. So we do have these two recommendations, and we go immediately to, honestly, as you can see, I'm sure you can see this, I do have a long position from around 70. It's doing great right now. It's about around 75 pips of profit. I took this yesterday, and I'm still keeping it, hoping for the best. Yet I'm gonna place these orders for you guys, so you can of course follow them. 81.3. Let's see, our stop is 71.7. It's a little bit of a large stop, but it's still within what we are willing to accept. And I'm sorry, guys, I'm not going to use the first target again today, just like I did on Monday. That's why I'm going to use 95.9 for both entries. So here we go, ready to take advantage once the gold starts exploding to the upside. If in case we drop back towards our small trend line, I want to be in at 72.7, so buy limit at 72.7. The stop, we said it has to be 64.7. And again, guys, I'm not going to use the initial target. I really believe in this. I really believe we can get there. So I'm shooting for the stars here and place. These are the numbers. You can go ahead immediately to your QTimeFX a live account and place these orders, or you can copy them, you can take a screenshot, you can write them down and follow them when you feel like it. Or maybe just look at these numbers and then compare the market price tomorrow to what we are expecting and see if they are doing good or not. I really believe in these positions. Gold is going higher. It's currently creating new highs. So with this, I leave you, and we're taking a 5-minute break, and we will be back after the break, guys. Okay, guys, welcome back. How's everybody? We just took our last break for the day. I hope you guys had something to drink or thought about the market. If you have any questions, if you have any requests, please shoot. Let me know what's on your mind. And before we go on with our last hour of the day, let me remind you that this live stream is sponsored by QTimeFX, our favorite Forex broker in the whole world, who's offering you a maximum leverage of 500 to 1 and was awarded for the lowest Forex spread broker of 2018 by ACIFMA. Euro, dollar yen, less than half a pip of spread, guys. And of course, with zero commission. Your funds, my dear clients, our dear clients, your funds are segregated in UOB, a bank ranked in the 22nd place in World Bank ranking. So you will feel very good about that. Of course, you would not have to worry about your money. It is in a very safe place. Open a VIP account with QTimeFX with $150 minimum bonus and get minimum deposit and get our bonus. We have two promotions now. You can deposit $300 and get $500 bonus, or deposit $150 and get $250 in bonus. You can withdraw equity after $1.50 per lot traded. To get promotional benefit, of course, you must, again guys, I'm telling you again, you must contact FX_Educast via Telegram, FX_Educast via Telegram. Contact us, and of course, you are going to find us with a smile, waiting for you to help you. If you have any question about the accounts, we're there. Any question about the promotions, the bonus, we are there. And of course, if you need help opening the account, we are there. FX Educast have a great team. I love these guys, and they are going to help you in every step of the way. So with that out of the way, let's head the charts, guys. The best part, you know how I love my charts. So this was the recommendation that we left with. Now let us move. What do you want us to talk about? Okay, how about the yen? About the yen, guys. Oh my God. Of course, you know, I'm sure you remember, I am a dollar yen bear, and I have made my case many times, guys. We talked about key resistance at 109.37, and we said as long as this is not broken, then we are going to be bears. Right? Now, let's see what is happening recently. Let me delete all of these tools and start all over again. I want to focus on what is happening recently. As you can see, guys, after testing 109.37, our key and most favorite resistance level, we have started falling again. That was extremely expected, very highly expected, because first of all, 109.37 is the Fibonacci 61.8 for this whole drop. And again, it was the top from which the price collapsed in early in August after the rate cut on the dollar. The high here was 32. The Fibonacci level is 37. And to add to that, it was the top of an ABC formation, which of course could be the top of wave 4. And if you know your Elliott, I did not count inside these waves, but if we consider this to be wave 4 in a 5-wave sequence, you can do that, of course. There would be a little bit of overlapping, I think, or maybe 3, 1, 2, 3, 4. Yeah, we do have overlapping. That's why I'm not very encouraged to count this as 4, but if you find the right wave count inside this move to count this ABC as 4, then you remember one of the very important guidelines in Elliott wave, and that is, of course, correction usually terminates around the top or bottom of wave 4 of one lesser degree. And here, of course, because we are in a correction that moving to the upside, we wanted to terminate around the top of previous wave 4 of one lesser degree, and this happens here if this can be counted as wave 4. Honestly, it's not very easy to count it as wave 4, but if we do, then the top here, very close to this one, makes perfect sense to our extremely bearish outlook on this pair. I said this before, guys, we're not looking for 50 pips here. With our short position, of course, we have been selling the dollar yen for a while and we have been making profit. But honestly, if you want to keep this position for the long term, our target is a minimum of 400 pips from current levels. A minimum of 400 pips. This pair, guys, is going to collapse. It may take some time. It may happen quicker than I think it will. But in both cases, regardless of the time it's going to take, the price target for the move to the downside is a minimum of 400 pips. We're not talking about 50, 60, 70, or even 100 pips. And of course, this is based on the failure to break above such a very important and key resistance at 109.37. Now let's take a look at what has been happening recently. First of all, I want to draw this trend line, and as you can see, this trend line starts from the bottom, seen in August. It has been touched many times since then, here, 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 and then penetrated. And now when it's penetrated, the bulls tried, it's like their last attempt to survive what is expected to be a horrible fate for them. So they pushed it again, trying to overcome this trend line, but they found resistance very close to the moving average band. This is bearish, of course, and then they gave up. So now support, of course, since we are below this trend line, a short position is already justified without even breaking any support levels. But we're going to wait for the next support. It's not very far. This is the next support. Maybe I'm gonna also calculate retracement levels. Let's see. What support are we talking about here? We do have, oh my God, forget this. Just look at this, guys. We do have only shadows below 71.4 retracement level at 33. And today's current low is 33 exactly. So immediately, we can tell that support is at 33. Okay. Now, I want to see the price pushing below 33 in order to initiate a short position. And as you can see, we are only 7 pips above that right now. So keep your eyes on the dollar yen. Once we start trading below 33, get in with a short position. Now the resistance, of course, the main resistance will continue to be 109.37 without a shadow of a doubt. But I want a closer resistance to place my stop above, and I do have the falling trend line from these tops here touching this, and currently it is running just above these tops here and here. So this top is 84. That's why my resistance is going to be 84. 108.84. And I'm gonna use these levels to build my trading strategy on the dollar yen for today. The first and favorite is, of course, the short position below 33. I'm going to place it at 28. That's enough for me. 5 pips, not even 10 pips. I need 5 pips below 33 and boom, I'm in. Okay, my stop should be above 108.84, 108.94. How about that? Maybe I'm going to add 10 pips because I really believe in the short position. So even if we try to push above our resistance just a little bit, I'm going to keep my short position. So sell at 28, stop at 04, 76 pips of stop, that's good, not very large. Now the limit, the targets, target 1, and I'm going to continue giving you that ridiculous target as target 2, 104.40. I know it's very far, but for you guys who are looking for a long-term position, this should be your target. Yes, from current levels to 104.40 or even below that. So we're talking about 400 and maybe even 500 pips to the downside. But of course, I'm going to give you a target for your day traders out there, a smaller target, not one that is very far like this one. And for that, of course, we can use the retracement levels. First of all, I'm going to try using the retracement levels for this whole recovery attempt. And 107.54, 55 actually. It's still, I want something that is even less than that, because I know you guys will like your modest targets. 107.79, that makes sense to me. 107.79, and to make it 50 pips exactly, just add 1 pip to that, so 107.78. You would have to be extremely unlucky to have the price reaching 79 and not 78. So I added 1 pip. I don't think that will change the outlook or change the result of this recommendation. Okay, so this is my favorite recommendation. Of course, I'm gonna also give you another recommendation. As said before, we do have a resistance at 108.84, and I'm gonna use that resistance as another opportunity to sell. If we go higher, before we trade below 108.33, if we go higher towards 108.84, I want to sell. Of course, if I see it in the 80s, I'm going to immediately sell it. I really believe in this short position, guys. Now the stop here, of course, it needs to be above 109.37, so 20 pips above that, 57, that makes sense to me. Now the limits, the targets, target 1 is going to be the close one, and target 2 is going to be absolutely ridiculous, 104.40. I love that. So 108.84, how about 33 itself can be a fantastic target for this short position. So we do have 2 sell recommendations for today. If you want me to issue a long recommendation, it would have to be at 109.75, and I'm going to do that. I don't think it will be hit. I really hope it won't be hit, but if we start trading 20 pips above 109.37, then the whole outlook would change, and that would leave us looking for a long position on the dollar yen. Not currently, I don't favor that, but above 109.37, I will change my mind. That's why I will have a buy at 109.57. Our stop should be, we'll think about that. Now our targets, I remember them very well from last session. We do have a retracement level at 10.13, sorry. And the top from which this whole thing started, this whole drop started, was 12.40. So these are my targets for a long position that I don't think it will be in the market. You know, this order will be canceled later today. At the end of the European session, as I always say, any orders that are not hit should be canceled. But what about the stop? This is the only question that we still have before we finish talking about the dollar yen. If I buy at 109.57, where should I place my stop? Well, maybe, let's say 30 pips below 109.37. Yeah, that is good. So these are the recommendations, guys. I'm going to take some of these drawing tools out so you can see clearly. So I'm going to leave these on the chart for a minute, and I'm going to immediately place them on my real QTimeFX account. So guys, first of all, we do have a sell stop at 108.28, only 10 pips below current prices. The stop is 109.04. And limit 107.78. And place. Now the second short order is going to be 108.84. It is a limit, sell limit 108.84. Our stop is 109.57. Of course, we don't want to stop this position below 109.37, only if we start trading above it, and 108.33 is our limit. Just in case a huge surprise happens and we start trading above 109.37, we are going to buy. But it will be a huge surprise to see this order being hit and triggered. Our stop is 109.07 and our limit is 10.13. And place. And there you go, guys. We are now positioned to take advantage of the dollar-yen when it starts moving. Okay, before I talk about the last part of today's strategy, I'm going to show you examples on the chart, live examples on the chart. I want to take a look at the comments, guys. I love your comments. Yeah, guys, please, if you know anybody who's interested in having these signals, you can share these videos with them. You can invite them to watch these webinars. I'm sure by now we have been together for a few weeks now. You know that these are good recommendations. So when you see anybody of your fellow traders, friends, anybody who's trading and looking for such service, please lead them here. And I'm sure they will say thank you, because you will be letting them in on such a fantastic recommendation service. Heather, thank you. Thank you. The signals are too good. Thank you very much. I don't want to share. I understand. I honestly understand that kind of feeling among traders. I really do. And Blaine, say, okay, guys. Nick and Michael, thank you guys for your comments. And let me now just talk to you about, this is the third part of the strategy that we'll be talking about today. And this will not be a slideshow. This will be real trading situations, guys. So we were talking about how to use retracement levels. Let me focus on the chart here. We were talking about how to use retracement levels, and we said one very important thing that I really want you to keep in mind and never forget, guys, is this. We do not get in immediately when the retracement level is touched. Why is that? Because we have a number of retracement levels that we need to pay attention to. For example, here we do see the 38.2 retracement level, but is it the only one? Of course not. Look at these levels, guys. Look at these levels. Any one of them could be the one we are going to witness a reversal from. 38.2, 50, 61.8%, 71.4, 78.6, 88.6, and this is not mentioning the Dow levels, which are 33 and 67%. So look at this. How many levels do we have? 1, 2, 3, 4, 5, 6, 7, 8. 8 levels. That means we have 8 levels where the price can start changing direction, start reversing like it did here. It did at one of them, but Before it starts doing so, we do not know, guys, which one it's going to be. Maybe it's 33%. Maybe this time it's 38%. Maybe it's the 50%. So it's not the same every time. It's different from one time to another. So what is the solution? Can anybody tell me? Do you remember what we said? Do you remember how we specify these levels, how we specify which one of them is the most likely to result in a change in the direction of the market, a reversal? Do you remember, guys? We talked about this before the break. I'm going to wait for 5 or 10 seconds for an answer, and then I'm going to answer it. Okay, guys, do you remember? Well, we said that we have many tools that we need to focus on. And of course, these tools are technical in nature. We have many technical tools that we can use in order to estimate the strength of a level. And even after that, we have the price action itself to make a decision on. For example, on the way higher, it is obvious that we found resistance around 46. Look at this high. It is 48. Of course, when you are talking about gold, 20 pips, that is nothing. No, that's not a lot of difference. So this high here is only 20 pips away from this Fibonacci level. And although we have some price action above it, it was only a shadow, not a real body, indicating that this is indeed a resistance we need to care about. This is one. Now, after we touch this level, of course, I did not buy at this level. When I saw 46.1, I was extremely excited about this level, but I said, wait until you see the price recovering. And then I got on the long side. I did not get in at 1446. So I waited for the price to move higher, and then I started believing in this move. This is what you should do. And one of the best ways to do so is to wait for a close. Look at this beautiful close. Okay, guys? We have a long lower shadow and a close, a daily close, confirming that indeed we have found support around 1446, 38.2 retracement level. After touching this level, as you can see, guys, we do have a beautiful hammer, very long lower shadow, very small upper shadow, very small body near the top of the range, perfect looking hammer. Of course, the color of the hammer is not important, red or green, it's the same. So when this candle closes, that is when you get in. Not here, guys, because we still, when we test this level, we still don't have enough evidence that this level is going to survive. But after a closing, when the price starts moving to the upside and it leaves behind a bullish candle just like this one, this is when you get in. So the close here is 53.8. 53.8 we get in. And as you can see, guys, currently we are at 1478. So 53 to 78, you have 250 pips if you followed this retracement analysis and bought at the close of this candle and waited until current prices. This was almost a week ago, yes, 8 days ago, and now you are pocketing 250 pips. And still, of course, it's going to move higher. My expectation that it's going to move higher and higher again. Paul, please show the placement again. Are you talking about the dollar yen, buddy? Because I'm gonna do just that. These are the recommendations. Paul is asking for them again. He wants to see them again. This is it, buddy. We really believe in the downside on this pair, and that's why I have two short recommendations. One, in case we start trading below 108.33 because it's a support, and we have a resistance at 108.84. If we got that high, I really want to be short from there. So if I got to 108.80s, I'm selling. And if we start trading below 108.33, I'm selling. And these are my recommendations for the day, Paul. Please, buddy, you can screenshot this. You can go ahead immediately to your QTimeFX live account and place them. Sell at 108.28, stop at 109.04, and our target is 107.78. Of course, we do have a second target, but it's very, very far. I don't think that a lot of you guys would place this as their target. So I did place this one when I placed the order. I placed my limit at 107.78. Again, Paul, please, if you are following this, please place the second short order at 108.84 with a stop at 109.57 and the target at 108.33. Use these numbers. And one note, if you are new here, buddy, we are talking about one of these recommendations. So the one that hits first, that's the one we are going with. When one of them is done, one of these two orders is done, go immediately to your trading platform and cancel the other order. Deal? And if any of either of them is, or any, because we have three actually, if any of these three orders is still not hit by the European session close, which is around 8 hours from now, then delete them all, cancel all orders. We don't keep orders for the next day. We have another session tomorrow, so no need for you to keep the orders until the next day. Tomorrow we're going to talk about this market again, and maybe we'll have different levels to get in at. So by the end of the European session, if they are not triggered, then you should cancel them. Okay, buddy? Is this enough? Paul, are you seeing this? I'm keeping these on the screen, these recommendations, because one of our viewers, we value every one of you guys. One of our viewers want to copy them, so they want them to be on the chart for a little more time. Okay? Now, I'm going to talk about the euro, of course, as an example for the retracement analysis. We have seen unbelievable situations, beautiful, beautiful reversals, almost exactly at retracement levels 3 times recently on the euro. Not one, 3 times. And they all came with a confirmation from Elliott wave. So I'm going to use this. As you can see, gold is still hitting higher highs. Fantastic. The current daily high is 78.8. Fantastic. That's great. Now let's talk about the euro as an example for our strategy today. As a live example. Of course, I'm not talking about the 5-minute chart. I'm going to use the 4-hour chart. Yes, this is what I want you to see, guys. This is what I'm talking about. After recovering from levels below 109, the price showed a 3 to the downside. The price action left us with a 3. Sorry, guys. And once you see a 3 like this, immediately use your Fibonacci or retracement level tool and see, I want you to investigate if the bottom of the ABC is very close to a retracement level. As you can see, guys, it is magic, absolute magic. The 50% level is at 109.39. The low is 109.39. Exactly. What do you need more than this? It's a beautiful situation. But of course, we don't buy immediately here. We wait for a bullish candle. And here we have a long lower shadow, small body. This is good. This is an indication of reversal. So when this closes, we get in. Here, of course, the close is 55. So we get in at 55, not at 39. And as you can see, the price started moving to the upside. Now, for this, guys, this is the proper wave count. Okay, for this kind of situation, guys, the target should always be above the top from which this correction started. So we are moving to the upside, we start correcting to the downside, we find support very close to our retracement level, and then we start rising. your limit should always be above the top from which this correction started. So when I get in here, I don't close my position here or here or here or here. I close it here in this area. And of course, a good question here would be how many pips above the stop? Well, it depends on the technical outlook. Of course, we need to see, for example, a previous support or resistance above this level, or maybe you can keep it very simple. Some of the traders keep it very simple. They say, well, this high here is 10. I'm placing it 20 pips above that, and that's it. So I got in at 53, 953. I placed my limit at 1020. That would leave me with 67 pips of profit. Not very bad at all. And it only took a matter of hours until we reached our limit. Now, what about the stop? The stop, guys, needs to be below the immediate, not below the immediate level that we are counting on, but below the next one. So this next one is at 109.25. I'll place my stop 20, 30, 40 pips below that, depending on what instrument am I talking about. If I'm talking about something that is volatile, of course, I would need to hide my stop further lower below the second level. If it was gold, I'm going to use 40, but since it's euro, I'm going to use 20. So 20 pips below 109.25 is 109.05. So I place my stop here, my limit here, my entry is here. Again, this has happened again here. Let me show you the magic again. Now, it happened very, very close to 61.8 retracement level. This level was at 86, 109.86. The low here was 109.89. Only 3 pips, or actually 2.7 pips if you want to be really, really accurate. Only 2.7 pips above this Fibonacci level, 61.8. But do we buy here? No, of course not. We wait for a bullish candle. And the bullish candle closes this one. This, as you can see, it's an engulfing pattern. Very, very beautiful. Although I would, of course, for an ideal engulfing pattern, I want to see more downside before it appears. But it's okay because we have an ABC here. And we do have an ABC that appeared before. 2 indications that the market is moving to the upside. And that is why, of course, once this candle closes at we're closing here, it's 1030, 1029.6, that's 1030. I get in. Of course, I want my limit to be above here. And my stop, because I bought, because the price stopped at 61.8, the next level is going to be 71.4. So I want to place my stop 20 pips below here. The 71.4 level is at 109.74. So 109.54. I get here at 1030.54, that is 76 pips of a stop loss, reasonable. And my limit should be above here, above the 1063, maybe 20 pips above that, 1083. So I got in at 1030, 1083, 53 pips of profit. I close my position. Okay, guys, so you see, we do not buy immediately because the price touched. We wait for a confirmation from candles from the price itself. We can, of course, also use other indications, other indicators, other observations to help us estimate that should we get in here or not, like RSI, moving averages, stochastic crosses, previous tops and bottoms, anything like that. For example, this bottom here is not very far from these tops here. You can draw this and see for yourself. This is very close to this one. So we're talking about only pips. Here it was in the 90s. Here we have 89. The low unbelievably close. This is another indication. Look at this beautiful resistance here, 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 and then a support here, here, here. Now, that's why when we drop to this area, and it's very close to Fibonacci level, that gives us a lot of confidence that the market is going to turn direction to the upside. Okay, guys, another beautiful example that we are currently using to build long positions. Let me use another chart because I don't want to take away the recommendations that are on the chart. Here I'm going to use the daily. We have seen a fantastic recovery attempt for the euro, reaching higher more than 300 pips above this 29-month low. At the end of that, of course, we have determined, and you can go back to the previous videos and see how many times we have talked about 109.95 as a very, very important support. It is the Fibonacci 61.8 retracement level for this whole move, and it is, of course, very close to this resistance here, the support here. We had many reasons to believe that this is a very important support, and we touched it last week on Thursday. The low was 109.89, very, very close to it, only 6 pips below it. The kind of magic that we can only dream of sometimes, but sometimes we see in front of our eyes happening, especially when you are following such a good webinar that identifies the best opportunities to trade in the market. So 109.95 was always expected to be a good support. And to add to that, the drop from the recovery high came in the shape of an ABC, adding to the confidence in a move to the upside. And of course, we do not buy when this is touched because the market can go lower. We do have levels below the 61.8 levels, like 71.4 at 109.65, 78.6 at 109.44, and 88.6 at 109.14. So all of these levels can be the levels, or one of them can be the level that will actually turn the market around. But why 61.8? It's a very important support, but it might survive, it might not. That's why we do not buy immediately when it touched. We wait for confirmation from the price itself. Let's see what happened to this price after the price touched here. As you can see, it touched a very strong candle, but it failed to break above the moving average band here. We came again to the same level. We survived again, and this time we penetrated the moving average band. So there is, of course, more than one point that you could have bought. Once you saw this very long and green candle, if you did buy here, nobody can blame you, of course. At 10.10, that's very good level to get in. Of course, this small drop would not have harmed our position because our stop would be below the next level. I'm going to talk about that in a minute. But for now, this entry makes perfect sense to me. At 10.10, you buy here. If you did not and you saw this, and then again, you see this penetration, this cross above the moving average band, then you would be in here at 10.14, 10.15, something like that. So at 10.10 or 10.15, it's only a matter of 5 pips between the 2 points that make perfect sense to initiate a long position here. And as you can see, guys, up until now, we have reached 90, which is 80 pips above this entry. 80 pips, guys. That's not bad at all. 80 pips of profit before we are now moving to the downside again. And we are getting very close to our long order. We do have an order to buy at 10.51. We are now at 10.58. We were in the 70s when this webinar started, when we talked about the euro almost 2.5 hours ago. And we said that we expect the price to go to 10.51. It's getting closer and closer. And if we get to 51, we are going, of course, to be in the market with that order we have placed at the beginning of this webinar. So, guys, getting in here and, of course, reaching, achieving this kind of profit is something very good. But, you know, the target is still way, way above. Remember what we said. We need to place our limit above the top from which the correction has started, and the top from which the correction has started is 1183. So I will continue to believe that your long position in this area, guys, can eventually reach above 1183. But you know the euro, it's a turtle. It's most of the time it's boring. I don't know why a lot of people love the euro so much. You have other instruments that are much more exciting, but you know, it is what people like. It's the most traded pair, and I have to take that into my consideration, of course. But for me, it is not that kind of exciting instrument that can reach targets very soon. That's why the long position around 109.95 from last week needs more time, of course, to reach above 1183. Its ideal target is, of course, above 1183. And by then, of course, when we reach that, we're going to remind you that this is what we expected. We do expect the price to travel above 1183 at the moment because of many reasons on the chart. One of them is this bottom right here. So this is it, guys, for today's strategy talk. We talked about the strategy. We showed you examples in a slideshow, and then again real live examples from the chart, from the current market environment. And I really hope that will help you understand the situation even better. So now we do have maybe 10 minutes to take a look at the pound. I don't know if that's enough for us to initiate some positions. These are, of course, the recommendations from the last session on Monday. It closed with a very small profit. We had a long, it was triggered. It closed with a very small profit, as we showed you in the beginning of this webinar. Now, as you can see, guys, we do have, I did not touch this trend line. Maybe I can adjust it just a little bit to be exact to this low. Yeah, this is perfect. As you can see, guys, we are now touching the support. The support is at this trend line. It is currently at 28.90. We are touching it. We are actually touching it. I want to see if this level is important from a retracement level point of view. I'm gonna try to issue a recommendation as fast as possible because we only have 9 minutes left in our stream. ABCXAB. This is the point where we should. I'm gonna. Yeah, this is fantastic. This is fantastic, guys. 61.8 retracement level for this last part of the recovery attempt is at 28.85. The trend line is maybe at 87 and the current low is 86. So it's very obvious that the 80s are very important. A very nearby, very close, very near level is the 50% for the whole recovery attempt at 28.76. So between 76 and 85, we do have support. So support is at 28.76 to 85. What about the resistance, guys? The resistance is, if we draw this trend line here, this makes perfect sense to me. I'm using, of course, I'm neglecting this shadow because this makes the trend line looks better, very close to the stop, very close to the stop, very close to the moving average band. So currently we do have this at 941. Of course, this is a falling trend line. So with time, it's going to get closer, lower and lower. So in the next hour, it's going to be around, still, of course, it's only a matter of pips. I'm going to consider it to be at the highest close in this area. The highest close is this one. It is 40. So resistance $29.40. In case we break the support, of course, a move to the downside should be expected. In case we break the resistance, a move to the upside should be expected. But I really want to get my long position closer than 40. So I'm going to use the bottom of the moving average band. Why? Of course, this is a risk I'm taking. The trend line is going to fall. In the next few hours, it's going to touch the bottom of the moving average band, which is currently at 32. So I'm going to change this to 32, 29.32, and I'm going to build my trading strategy around these levels. Keep these here. If we break above, sorry about this, guys. If we break 29.32, that is a long for me. If we break the support 28.76 to 85, that is a short. So let me start building my strategy. Buy at 29.32, 42 is enough. Stop 10 pips below 28.66. Yeah, that is 76 pips of a stop. That is reasonable. Now what about the limits? Target one, of course, we have seen 29.76 recently, and before that we have seen 30.13. 30.13 makes a lot of sense to me, but I don't want to push it too much, guys, into the 70 pips. I want to keep it very close to 50. That's why I'm going to use 30 figure as a target. I'm going to take a look at target 2 in a little while. Let's see. Maybe we can use this chart. Go to the daily. Gonna remove, yeah, 30, this is it. Gonna go to the daily and remove all drawing tools so I can see clearly. If we start trading, of course, above this, I need to see if we have a resistance above here. And the first tool that I use when I want to identify resistance and support is definitely retracement levels. I really believe in retracement levels, guys. They are the kind of tool that I'm actually really seriously in love with and have been for a very long time. 30.77 is the 78.6 retracement level for this move to the downside. So I'm going to use it as a second target, 30.77. Now, what about the sell recommendation? Of course, if we break below the support area 28.76 to 85, I want to be short. So 28.66, and of course the stop is going to be above this trend line. That's going to be 42. So it is a stop reverse. These two recommendations are exactly the opposite to each other. The stop for the buy is the entry for the sell, and vice versa. Now, targets. Initial target, I want it to be around 50 pips, so I want something just above 28. And of course, when we break this trend line, we can think about trading below the previous touch of the trend line. This touch was 23, so how about 10 pips below that, 28.13, 10 pips below this bottom here, because of course a break below this trend line would indicate attack on this previous bottom. And I'm going to use we have 27. Of course, it's a retracement. I'm going to show you. It is a retracement for this recovery attempt. It's the initial retracement for this move, 38.2. Yes. This is why 27 is going to be my target. This is it. 38.2 retracement level. We have an ABC, then this is X, and of course we should expect an ABC to the downside, in which case 27 would make absolutely perfect sense as a target. So this is it, guys. This is in red. We managed in less than 10 minutes to issue a recommendation, 2 recommendations on the pound, and I'm going to place them. We have sell stop at 128.66, 128.66, with a stop at 129.42. Our limit is going to be 28.13, 28.13, and place, guys. 28.66, 29.42, 28.13, place. As you can see, these are the numbers. Now, what about the long position? Of course, it's a buy stop. 29.42, 28.66, and 30. And place. This is it, guys. Buy at 29.42, stop loss 28.66, and limit at 30. With this, guys, we have talked about one trading strategy. We have issued recommendations on 4 pairs today. I'm very happy about that. I'm very excited, looking forward to see what will happen to these recommendations. I really believe in them, and most of them, the pound, maybe we did not spend enough time on the pound, so that would be a little maybe less interesting to me than other pairs, but we have spent enough time on euro, gold, and the dollar yen, and that of course is why I believe in these recommendations. With this, guys, we have finished our third and last hour for today, and before I say goodbye, I want to wish you a fantastic trading ahead, and I want to remind you that this live stream is sponsored by our favorite broker in the whole world, QTimeFX, who is offering you a leverage of 500 to 1. Your broker has won the award for the lowest forex spread for 2018. Imagine yourself trading with this unbelievable spread combination, guys, and 0 commission. I love that. I like that very, very much. Of course, to top that, we are offering you $500 in free bonus. Make $300 deposit and get $500 in bonus, or $100 deposit, $150 deposit, and get $250 in bonus. To get promotional benefit, you must contact QTimeFX and FX Educast. Use this account, guys, on Telegram, FX_Educast via Telegram, and you will find us there. Very, very happy, very, very ready to help you. If you have questions, we have the answers. If you want help opening the account, we're there for you. So don't hesitate to contact us and use this amazing opportunity to get yourself hundreds of dollars in bonus. Of course, adding to that, all the recommendations that we are giving to you free, because we want our clients to make money. This is what QTimeFX is about. They want you to be successful in the markets, guys. They're not working against you. They are the kind of broker who wants you to make money in the market. And with this, guys, it has been a great session for me. I love you all very much, and I want to wish you great trading for the next 21 hours until we meet again tomorrow. And as I always sign off, good trading and good luck. Let me know tomorrow, what do you think about today's trading? What happened to your account when you followed these recommendations? And of course, we're going to talk about that in details tomorrow. So in 21 hours from now, guys, I want to see each and every one of you. I really liked being with you guys here. One last thing, the comments here. Can you do the dollar yen? We did that, bro. Please go back to the video and you're going to find the recommendations there. With this, guys, it's time for me to say goodbye. Wishing you fantastic trading ahead, day, night, afternoon, morning, wherever you are. I want you to have the best time and the best trading. Best luck, best wishes, and see you again in 21 hours, guys. Bye-bye.